We know the Robinhood situation has been a roller coaster of emotions and also strange decisions mixed in there to cause those emotional reactions. And I know there's a lot of people out there who are upset with Robinhood or scared to use them because of what they've done recently with the GameStop situation and all the meme stocks out there and how they restricted trading and then gave one answer saying why they did it and then gave another one after that. You might not like that, but you also might not like some of the other situations that have happened in the past with Robinhood. For example, when their servers were completely overloaded and they couldn't allow any trading at all during March, especially when you had the biggest run-up in stocks, I think, ever following a large crash. So maybe you don't want to use Robinhood and you want to use another brokerage instead for your investing, then this video should help to get that search started for you. The purpose of this video is not to bash Robinhood, but rather is to weigh some of the pros and cons of a few other brokerages, each of which I actually use for my portfolio. But before I get into that, for those of you who are new to the channel, my name's Jack Duffley. I'm a 23-year-old real estate investor and soon-to-be attorney, and on this channel I cover a variety of topics as they relate to investing and personal finance. So if you like that sort of content, be sure to have a look around the channel, and if you like what you see, be sure to subscribe. But like I said, I'm going to go over some brokerages, 3 to be exact, one small brokerage, one I'll call it medium-sized brokerage, and another very large brokerage, each of which I use for my portfolio. This isn't in any particular order, and I don't think there's a perfect brokerage for any one person. Every brokerage has its advantages and disadvantages, and I hope to shed some light on those in this video. And since Robinhood's big claim to fame is its commission-free trading, maybe not exactly free, but mostly free, and it certainly has driven costs down of trading significantly for the average investor, I'm only going to be looking at other brokerages that also offer commission-free trading just to keep it sort of fair. And that's all I really use after all anyway, so it makes it easy. Let's start with my choice among these small brokerages, and that is M1 Finance. It's no surprise to anyone who follows my channel, I have a lot of content about M1 Finance and specifically breaking down my portfolio in M1 Finance. I do it every single month on the 15th, so be sure to subscribe so you don't miss that. But it, like Robinhood, is a smaller brokerage in the fintech space that has had a lot of success in recent years. But M1 Finance has about $2 billion in assets under management. That's actually doubled since about a year ago, so they are on an upswing in growth, and they've done pretty well with maintaining that growth trend. Like Robinhood, M1 Finance's biggest advantage, in my opinion, is its amazing interface. It's very easy to understand, it's very easy to use, and it's not overly complicated or buried within many different tabs like some other brokerages out there. It makes it very easy to take a look at how your portfolio is allocated, and one of the biggest, best features of M1 Finance is the fact that you can automatically rebalance your portfolio so that when any new cash or dividends are entered into the account, they automatically are distributed to any underweighted sections of your portfolio. And because M1 Finance also allows fractional trading, just like Robinhood does now, you're able to really fine-tune your portfolio without needing to fork over thousands of dollars for an expensive share of some company. This lets you get started with very little money, and there's no account minimum fee or anything like that, so it's very easy to get started. I always include an affiliate link in the description below to M1 Finance, and so long as they keep doing a decent job, I will keep it down there. But another perk of M1 Finance that definitely should not be overlooked is very cheap margin loans. I'm not saying you should use margin to invest or not, but it is nice to have that option there at a very low cost. If you're an M1 Plus member, which I am, which costs currently $120 per year, then you could take advantage of 2% margin loans as opposed to 3.5% for any free users. This adds a nice level of flexibility to your portfolio since you can pull out money without having to sell off your assets, and then you can use that money to maybe do a down payment on a rental property. And then when you fix up that rental property, you do a refinance and then pay back the margin loan. You can do lots of things with margin. Obviously, be careful. You don't want to run into margin calls. I've covered that on this channel before. Margin must be used responsibly, just like any other debt. And I guess now would be a good time to mention that this video is not financial advice. Definitely consult a licensed professional. But despite having commission-free trading, one of the biggest drawbacks of M1 Finance is the fact that you can only trade at 1, if not 2 windows in the day. So you can't use day trading methods or set stop losses or things like that. You can only trade at 2 times during the day. You get 1 window when the market opens, and you also get a second window if you're an M1 Plus member right before the market closes. So you have 2 windows in the day at most to trade currently. I don't know if they're going to add more in the future, but it's really not designed for day traders or short-term swing traders. But it is very great, in my opinion, for more passive style investors who really just want to put money into their portfolio. It automatically rebalances, and you don't have to worry about anything besides just being sure to fund that portfolio. Or if you have a lot of dividends coming in, it'll sort of fund itself and keep rebalancing, which is super nice, very easy to use. That said, you don't have to be a super passive investor. I do long-term active trading on M1 Finance without issue. It fits my needs. Definitely take a look at it if you're at all interested. So that's a small brokerage. What about a medium brokerage? brokerage, and I mean, it's not really a medium-sized brokerage. There aren't really many between $1 trillion and, say, a couple $1 billion, like some of these fintech startups. So I guess the medium brokerage here on this list is Fidelity, which I just started using recently. Fidelity has about $3.3 trillion in assets under management, so it has been around the game for a while and has a lot of money that it is managing. The big reason I actually opened my Fidelity account was so I could take advantage of over-the-counter markets, since on M1 Finance you can't trade in every single security out there. You can't really do that on any brokerage, generally speaking, but you can't do over-the-counter trades. So, for example, I recently invested in Pershing Square Holdings, which is Bill Ackman's hedge fund, which is actually based on the London exchange. So you can't actually buy it normally using something that doesn't allow for over-the-counter trading. But Fidelity does do that, so I opened up an account there. It was free to open the account. There's no minimums or anything like that, just like all these others. So I set that up, made my trade in the over-the-counter markets, and that's what I'm using it for. And I think I'll eventually add a lot more money to this Fidelity account, but right now I'm focusing on M1 Finance since it has that really nice margin option. Not that Fidelity doesn't either. It has many of the same tools that any brokerage out there will have. Like M1 Finance, Fidelity does allow for fractional shares, which is great, which makes it easy to very fine-tune your portfolio without having to have a ton of money. And they also offer some very low-cost index funds and mutual funds that give you super broad diversity without breaking the bank. You're paying very low expense ratios, which is what you really want in an index fund anyways, since you're just following an index. You don't need an expert to pay after all. So it's also a great option for passive investors, but unlike M1 Finance, you can trade securities throughout the day, not just in those windows. So if you want to trade on Fidelity, it works there too. Again, commission-free trading, always a great thing if you're trying to day trade. You can also take advantage of things like options on Fidelity, which you cannot do on M1 Finance. So if you want to add that level of complexity to your portfolio, you definitely can. I'd say the only real major drawback of Fidelity is its rather lackluster interface. It's pretty easy to use though, so it's really not a bad thing. I really do think Fidelity is a very solid overall brokerage, especially if you don't have a massive account and you just want to get started with something that's pretty easy to use, not too complicated, and yeah, that's about it. Now, as for a large brokerage, assuming we don't count Fidelity as large, because it really is a large brokerage too, the last one I'm going to mention here is Vanguard. Yes, old reliable Vanguard, which has something like $7 trillion in assets under management, so definitely managing a large portion of the world's money. Vanguard practically invented and definitely normalized the index fund, and the low-cost index fund at least, that follows something like the S&P 500 by creating a very diversified portfolio using a robo-advisor. Fidelity does the same thing now, and a lot of other brokerages do it now too, but Vanguard was there first, and they still are a world leader in that class. The very first brokerage account I actually opened up was my Roth IRA on Vanguard, and I use a target retirement fund, which is a nice tool that they have where you can buy into a fund that will automatically switch more towards bonds as you reach the target retirement date. So for me, that's 2055 is what I picked. So as I get closer to 2055, it will switch towards more bonds and lower risk assets as opposed to all equities. That's something that Fidelity offers as well. They do offer target date funds, but Vanguard, I believe, was the very first one to offer that too. And just to clarify, they do have commission-free stock trading, so if you want to trade on Vanguard, you definitely can. However, they do not offer fractional shares, which is definitely a drawback. But really the biggest drawback, and maybe I'm putting too much weight on this, is the interface. It is pretty horrible. It's very hard to navigate the site sometimes. You want to go and buy something, but you have to go through like 3 tabs to get to it. It's just needlessly complex and really needs to take some notes from a lot of the newer brokerages that have fantastic interfaces, but maybe are missing some of the features of Vanguard. If you can kind of put those two things together, oh man, we'd have a great brokerage. But I'd say Vanguard is an especially good option for a long-term passive investor, especially using their target date funds, or really any of their index fund products. If you're not looking to really do your own stock picking, you just want a broad diversified portfolio, great option in Vanguard. But really between these 3 brokerages, M1 Finance, Fidelity, and Vanguard, I'm kind of splitting hairs. They're all great brokerages. It just kind of depends on the style you're going for. If you're purely passive and want that automatic rebalancing effect of M1 Finance, great option there. Might be better than the other 2. But if you don't really care about that and all you want is to deal in over-the-counter securities, then maybe Vanguard or Fidelity would be a better option because M1 Finance is limited in that regard. It's worth doing some research into these 3 brokerages. They are free to open up accounts, so you might as well check them out and see what fits your needs, and then you can make your decision from there. Or you can use all 3 like I do, since you never want to put all your eggs in one basket, I suppose, so you can diversify brokerages too. So if you're not happy with Robinhood anymore and you don't want to use them, or maybe you do and you just want to diversify your brokerages a little bit, then these 3 should all be a great place to start. But if you like this video, definitely like it, since that would help the channel out a lot. And if you like this sort of content about investing and the markets and anything about personal finance in general, then definitely subscribe, since I put out new videos every single week and wouldn't want you guys to miss out. And despite some of the controversy recently, I do keep including my Robinhood and Webull links down below, so you can get some pre-stocks from those brokerages. Even if you don't really want to use them, you might as well take advantage of the free money, and if you want to just close your account after that, I mean, no one's going to stop you. But as long as I keep offering the free money, it'll be down there in the affiliate links in the description below. But until next time, take care.